The 9 EMA day trading strategy does not work. I'm going to show you a much better way. I've backtested it over 5,000 times. I'm going to show you more about this. Veteran traders have used it throughout different administrations and volatile cycle markets, but they're starting to switch to other confluence metrics because the banks and institutions want you to use the 9 EMA and other common indicators. Why? Because it's easier for them to sweep your liquidity. They know where your stops are. They know people use this common knowledge. They want you to use the common knowledge. So if 90% of day traders are failing, you have to do what only the 10% know. And those 10%, who are they? The banks, the institutions, the Wells Fargos, the Goldman Sachs, the Citicorp, the Citibank, the Deutsche Bank, the Barclays. Those are the institutions. They're the ones raking in the dough. So let me show you what the winners are doing, and then we will show you how to use the 9 EMA day trading strategy with Confluence, other aspects of Confluence, to make a winning strategy. So here's what the big boys are doing. They're buying up price, but they're not going to keep buying over and over, because every time they buy up the price, they're going to have to spend more because they drove up their own price. They're going to have to spend more money to buy the next share and spend more money to buy the next group of shares. So they're not going to do that. What they're going to do is they're going to buy up, and then they're going to wait for price to fall back down. Why do they wait for it to fall back down? Because they get a cheaper price after it falls back down and after it retraces. And then they put in the second batch and the third batch and so forth. The same thing on the way down. They're not going to keep selling, because every time they do, they get a lower and lower price for every time they want to sell. So instead, what they're going to do is they're going to sell off, and they're going to wait for the price to retrace, because after it retraces, they get a higher price for when they want to sell again. Then they put the next batch in. That's how it works. Okay, so then and I'll show you this, if we create a strategy that has a bracket order, let's say here's the sell down here, here's the buy up here, and we say, okay, I'll put a bracket order in that's 1-to-1 risk to reward, okay? And we buy all throughout this. Every time it goes above the 9 EMA, every time it goes below, we're going to sell, we're going to buy, that sort of thing. We're going to get a 50-50. Now, that is not true the closer we get to the extremes, because if you're at the extreme here, the likelihood of it going down is very low. It's higher that the price is going to go up because it's at the extreme. They just started their buys. The likelihood that this is going to keep going up is very low because they don't want to keep driving price up. They want to wait for it to retrace. So 1-to-1 risk to reward here, going down, taking a short, is much better. Waiting for the extremes is where it's at. But just buying in the middle between the extremes, look at this, like wait till the extremes. Then it's a much more likelihood. But if you buy in the middle of the extremes, it might keep oscillating back and forth before it goes up. You got about a 50-50. So wait for the extremes. Now let me go ahead and show you how we're going to let me go ahead and show you what to do to program that and get that in real easy. So I like to just go in here to Gemini and have it code a strategy for me. It's just so much simpler. So make me a strategy that when the bullish candle crosses the 9 EMA, it goes long, and when a bearish candle crosses the 9 EMA, it goes short. Set the risk reward to 1-to-1. Gemini seems to do a better job than ChatGPT on coding, at least currently. So then I take this code that it's given me here. It's nice. So I have to code it myself. Go ahead and put it in here to this strategy. Then I go ahead and compile it. This button up here, it's thinking. Then I come over to the analyzer here, and let's go ahead and give this guy a run. And it's running the back test, and it looks like the percent profitable is 50% win rate. Okay, so that's about what I expected, and there's a small loss here, and that is over 5,422 trades. That's a lot of trades, so that's fairly statistically significant. So that's why I say the 9 EMA day trading strategy is just garbage, because it's not going to give you any more than, that. So because they go until they hit their profit targets, what I should be doing is I should code this thing so that it goes to the extremes. That's what I need to be doing. So if the big banks and the institutions are going until they hit their extremes, I went ahead and made this other code so that it goes until it hits the extreme. I'm not going to bore you with it, but I went ahead and I made another prompt to say, okay, go ahead and do the same 9 EMA strategy, but only get in when it hits the extremes of this chart. What if it only did that at the extremes, like down here? What if it only did that when it was here, or here, or here? Only at the extremes, or up here, before the pivot, before it changes direction, up here. What if it only does that up here? What if it only does it right here? So I'm going to now code it, and I'm not going to bore you with all this, but now I'm going to go ahead and code it so that it only runs this script when it's at the extremes. Does it take the 9 EMA long or short? Okay, so now I went in and I coded a different strategy. I went to Gemini and I asked it to code me this strategy right here. And the reason I did that is because it's a whole lot faster than coding it myself. And now let's go ahead and backtest this strategy. We're going to go ahead and run this for 20 points. Let's see how this one does if we run this backtest to get it at the extremes. This is beautiful. This is actually not what I expected, but it's great. It's actually better than I expected. Why? Because look at this. Okay, so yes, it loses. I don't care about that just yet because it's not real money. Out of 16,577 trades, it has a 32% win rate on a 1-to-1 risk reward. You know what that means? It means all we got to do is flip it. All we got to do is flip it, and then it will have a 68% win rate. Isn't that lovely? So we already have a strategy. Look at that, folks. So what does that show? That shows, let's go ahead and look at this chart. Look at all those trades, man. That's a lot. But the point is, don't take the 9 EMA day trading strategy. The point I'm making is, you want to take that strategy when the big guys are selling. Take it at the extremes. Take it there. Where else do we take it? Take the trade there at this extreme right before it starts to go down. Take the trade up here before it starts to go down. Take the trade up here before it starts to go down. Or vice versa. Take the trade down here before it starts to go back up. So I went ahead, and I'm not going to bore you with it. If you care to see it, it's in the description. Go ahead and click the link, and it'll send you to a website. You can you can sign up and download the code and everything, and yeah, or you get it there. So link in the description if you want to know how to code this, so you don't have to code it on Gemini yourself. But Gemini saves a lot of time. But getting the 9 EMA at the extremes is where it's at. Because then, as you can see, the risk to reward summary, look at that. You would have made $2,228 in about 2.5 months. So here's the start date, here's the end date. Wonderful. And that's with one contract, guys. I think I told it to enter one position each time. What did I say there? Yeah, entries per direction right here. One entry per direction. Okay, so like you could have totally done 2 contracts, 3 contracts, 4 contracts, 5 contracts. You see, and that right there, negative becomes a positive because you just flip it. It's the beauty of a 1-to-1 risk to reward ratio. Because now I just flip it because it has a 32% win rate. That means it has about a 68% losing rate. So if I flip it and I buy when it tells me to go short, and I go short when it tells me to go long, now all of a sudden it flips it and it's 1-to-1. And so if I had 2 contracts, it'd be twice that. 3 contracts, 3 times that. 4 contracts, 4 times that. Lovely, lovely. Again, I'm not going to bore you with all the stuff that I just did with the coding with Gemini, the prompts I gave it. You can look in the description. There's a link in there. You can go ahead and click on that, and it'll show you where, give you the code, or it'll tell you how you can create your own code, that kind of a thing. But this is why the 9 EMA strategy does not work on its own. You need more confluence.